Given the bullish price forecast for Bitcoin and the current price hovering near the support level, a long-term investment strategy appears promising. The entry price should be around $103,000, capitalizing on the potential for price appreciation towards the resistance level. A stop loss at $102,235.61, slightly below the support price, protects against unexpected downturns. The target price can be set at $106,000, aiming to capture a significant portion of the potential upside before the price potentially reaches its resistance level. This strategy aligns with the bullish sentiment indicated by the price forecast and historical price action, suggesting a potential for continued growth in the near future. By entering a long position at $103,000, investors can benefit from the predicted price increase towards $106,000. The stop-loss order at $102,235.61 provides a safety net, limiting potential losses if the price unexpectedly declines. This strategy capitalizes on the positive outlook for Bitcoin while mitigating risk through a well-defined stop-loss mechanism. Holding the position for a medium to long-term horizon allows investors to ride the potential upward trend and potentially achieve substantial returns. Based on the provided price history and forecast for Bitcoin Cash, a short-term investment strategy appears most suitable. The price has experienced fluctuations over the past 2 weeks, but the forecast indicates a slight upward trend in the coming week. The current price is hovering near the support level of $431.1, suggesting a potential for a bounce upwards. Therefore, a long position is recommended. An aggressive investor could enter at $432, with a stop-loss set at $427 to minimize potential losses. The target price could be set at $446, aiming to capitalize on the potential upward movement towards the resistance level. This strategy capitalizes on the short-term bullish sentiment indicated by the forecast while managing risk through a well-defined stop-loss. Based on the provided data for stacks, a cautious short-term investment strategy appears most suitable. The 2-week price change demonstrates a downward trend, and the 1-week forecast predicts further declines. The historical prices show a recent dip below the support level, suggesting a potential continuation of the downtrend. Therefore, an investment strategy involving a short position is recommended. A suitable entry price would be around $1.42, close to the recent price action and slightly above the forecast low of $1.34. The stop loss should be set at $1.45, above the current price and the resistance level, to minimize potential losses if the price unexpectedly rises. The target price could be set at $1.33, slightly below the forecast low, allowing for a modest profit while capitalizing on the anticipated decline. This strategy emphasizes risk management and capital preservation, aiming for modest gains in a potentially volatile market. Based on the provided Ethereum price data, a medium-term investment strategy appears to be the most prudent approach. While the historical prices show some fluctuations, the overall trend suggests a sideways movement with a slight upward bias. The forecast also indicates a relatively stable price range, with minor fluctuations around the $3,250 mark. Considering the support price at $3,239.56 and the resistance price at $3,628.50, there is a possibility of a consolidation period within this range. A medium-term investment strategy allows for capitalizing on potential price movements within this range without being overly exposed to short-term volatility. Therefore, a long position is recommended for a medium-term investment strategy. An ideal entry price would be around $3,250, coinciding with the forecasted price and offering a potential entry point near the support level. The stop-loss order should be placed at $3,230 to mitigate potential downside risks. The target price could be set at $3,350, aiming for a modest profit within the predicted price range. This strategy allows for a balanced approach, aiming to capitalize on potential upward movement while managing risk effectively. Given the price trends and forecast for Ripple, an investment strategy focusing on a short-term approach appears to be the most suitable. The historical prices show a slight upward trajectory, but the forecast indicates a potential increase towards $3.37. This suggests a bullish short-term outlook, making a long position advisable. However, the price is already nearing its resistance level of $3.1756, indicating that a significant price surge may be less likely. Therefore, a conservative approach would involve entering a long position at a slightly lower price point than the current market price, allowing for some room for price adjustment before a potential upward move. A suitable entry price for this strategy would be around $3.12, aligning with the historical price data and the forecast. The stop loss should be set at $3.05 to protect against unexpected price drops. The target price can be set at $3.30, aiming to capture a portion of the anticipated price increase. This strategy allows for potential profit from the predicted upward movement while mitigating risk through a well-defined stop-loss order. Given the price trends and forecast for Binance Coin, a short-term investment strategy focusing on a long position appears promising. The historical prices demonstrate a general upward trend, with the current price hovering near the support level of $685.69. The forecast suggests a gradual increase in price over the next week, reaching a potential high of $690. Considering this positive outlook, entering a long position at the current market price around $682 would be a strategic move. To manage risk effectively, a stop-loss order should be placed at $680, slightly below the current price and the support level. This will protect against any unexpected downward price movements. The target price should be set at $695, aiming to capture potential gains as the price moves towards the resistance level of $721.33. This strategy capitalizes on the anticipated upward momentum while mitigating potential losses through a well-defined stop-loss order. Based on the provided information for Stellar, a short-term investment strategy appears most suitable. The price history demonstrates volatility, with recent fluctuations around the 43 cents mark. While the forecast suggests a slight upward trend, the proximity to the resistance level of $0.4365 indicates potential for a pullback. Therefore, a short position could be considered to capitalize on this potential decline. An entry price around $0.431, aligning with the forecasted price, would be prudent. A stop loss at $0.4365, slightly above the entry price, would protect against unexpected upward movements. The target price could be set at $0.422, aiming to capture potential profit from a decline towards the recent support levels. This short-term strategy allows for potential gains from a short-term price correction while managing risk through a well-defined stop loss. The Toncoin forecast suggests a downward trend in the coming week. The historical price data also shows a recent dip, with the price currently hovering near its support level. Considering these factors, a short-term bearish strategy appears to be the most suitable approach for Toncoin. To execute this strategy, we recommend entering a short position at the current market price, which is around $5.13. The stop loss should be placed above the recent high of $5.35 to limit potential losses. The target price should be set at $4.90, aligning with the lower end of the forecast range and allowing for a healthy profit margin. This strategy capitalizes on the anticipated price decline while managing risk effectively. Based on the provided Cardano price information, including the recent price history, forecast, support, and resistance levels, a short-term investment strategy appears to be the most suitable approach. The historical price data shows a slight downward trend over the past 2 weeks, with the forecast suggesting a continuation of this trend in the coming week. Therefore, a short position on Cardano is recommended. An entry price of $0.985 aligns with the forecast and allows for potential profit as the price moves towards the support level. A stop loss should be set at $0.992 to minimize potential losses if the price unexpectedly rises. The target price can be set at $0.969, slightly above the support level, aiming to capture a portion of the anticipated decline while managing risk effectively. Given the historical price data and the positive forecast for Litecoin, a medium-term investment strategy focusing on a long position appears promising. The historical price demonstrates a consistent upward trend, with recent fluctuations around the $118 to $125 range. The forecast predicts continued growth, reaching $132 within the next week. This suggests a potential for Litecoin to surpass its recent highs and reach new levels. Therefore, a strategic entry point would be around $118, aligning with the current price and providing room for appreciation. A stop loss at $113 would mitigate risk by exiting the position if the price drops below a key support level. The target price could be set at $130, allowing for a healthy profit margin while acknowledging the potential for price fluctuations. This medium-term approach capitalizes on the anticipated upward momentum while balancing risk through a well-defined stop loss. Based on the provided price information for SWAY coin, a cautious investment strategy would focus on a short-term approach. The historical prices show a volatile trend with no clear upward or downward momentum. The forecast also indicates a decline in the coming week, suggesting a potential bearish outlook. The support price at $3.7152 and resistance price at $4.2903 provide a range for potential price movements. Given these factors, a short position is recommended. An entry price of $4.19, slightly above the last recorded price and close to the resistance level, would allow for potential profit if the price drops towards the support level. A stop loss should be set at $4.31, slightly above the entry price, to minimize potential losses. The target price should be set at $3.80, aiming to capture a portion of the potential decline while avoiding excessive risk. This strategy capitalizes on the short-term bearish outlook while managing risk through a well-defined stop loss. Based on the provided price history and forecast for Aptos, a short-term investment strategy appears most suitable. The recent price history demonstrates a downward trend, with the forecast projecting further declines. While the support price at $7.55 provides a potential floor, the resistance at $8.47 suggests limited upside potential. Therefore, a short position is recommended to capitalize on the anticipated price decrease. An entry price of $8.30, aligning with the current price and the downward trend, would be prudent. The stop loss should be set at $8.50 to limit potential losses if the price unexpectedly rises. The target price should be $7.60, aiming to capture a significant portion of the anticipated price decline while staying above the support level. This short-term strategy allows for potential profits from the expected price correction in Aptos. Given the price trends and forecast for SAY, a cautious investment strategy would focus on a short-term approach to navigate the potential volatility. The historical prices show a mixed trend with fluctuations, while the forecast indicates a slight downward movement. The support price is at $0.3389, suggesting a potential floor for the price, while the resistance is at $0.3963, indicating an upper limit for the upward movement. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $0.360 would allow you to enter the trade slightly above the current price, providing a buffer against immediate price fluctuations. The stop loss should be set at $0.370 to limit potential losses if the price unexpectedly moves higher. The target price should be set at $0.330, slightly below the support price, allowing you to take profits before the market potentially finds support at $0.3389. This strategy aims to capture a short-term decline while managing risk effectively. Based on the Ethereum Classic price information provided, a short-term investment strategy with a bullish outlook appears suitable. The historical price data reveals an upward trend, with the price hovering around the support price of $25.80. The forecast indicates a gradual increase, suggesting continued upward momentum. Therefore, I recommend taking a long position on Ethereum Classic. An ideal entry price would be around $26, slightly below the current price, allowing for some room for price fluctuation. A stop-loss order should be placed at $25.80 to protect against potential downside movement. The target price could be set at $29.11, the resistance level, aiming to capitalize on the potential price increase. This strategy allows for a quick and potentially profitable trade while minimizing risk. Based on the provided Polygon price information, a conservative short-term investment strategy appears most suitable. The 2-week price history demonstrates a fluctuating trend with a slight downward bias, and the forecast predicts further declines. The support price of $0.4321 indicates a potential floor for the price, while the resistance at $0.4518 suggests limited upside potential. Therefore, considering the price trends and forecasts, a short position on Polygon is recommended. An entry price around $0.445, slightly above the current price and below the resistance level, would allow for a small margin of safety. The stop loss should be set at $0.451, just above the resistance, to minimize potential losses if the price unexpectedly rises. The target price could be set at $0.425, below the support level, aiming to capture a potential decline in the price. This strategy prioritizes risk management and capital preservation while seeking modest profits from the anticipated downward price movement. The current price trend for AEVO shows a downward trajectory, supported by the price history and the forecast indicating further declines. The forecast suggests AEVO could drop from its current price to as low as $0.253 in the coming week. The support price at $0.2807 suggests a potential floor for the price, while the resistance at $0.3553 indicates a significant barrier for upward movement. Given these factors, a short-term bearish investment strategy appears most suitable for AEVO. To capitalize on the anticipated price decline, an entry price of $0.291 could be considered, aligning with the current price and the forecast. A stop loss at $0.298 would help mitigate risk in case of an unexpected price surge. The target price should be set at $0.271, slightly above the forecasted lowest price, allowing for potential profit before the price potentially rebounds. Based on the provided optimism price information, a cautious investment strategy is recommended due to the mixed signals observed in the historical price data and the bearish forecast. The historical prices show a fluctuating trend with no clear upward or downward momentum. The forecast indicates a continuous decline in the price of optimism over the next week, suggesting a potential bearish market sentiment. Considering these factors, a short position on optimism appears to be the most suitable strategy. An entry price of $1.70, slightly above the current price, would allow for a small margin of safety. The stop loss should be set at $1.75 to limit potential losses if the price unexpectedly rebounds. The target price could be set at $1.58, aligning with the lowest forecast price, allowing for a potential profit before reaching the support price of $1.518. This strategy prioritizes risk management by setting a clear stop loss and capitalizing on the potential downside movement indicated by the forecast. Given the historical price trends and the provided forecast for STRK, a cautious investment strategy is recommended. While the historical price data shows some volatility, it lacks a clear upward or downward trend. The forecast also suggests a potential decline in price over the next week. Considering these factors, a short-term investment approach with a short position appears more suitable. An entry price of $0.385, slightly above the recent lows, would allow for potential profit as the price potentially moves towards the support level of $0.3643. The stop loss should be set at $0.395, above the entry price, to limit potential losses. The target price could be set at 35 cents, aligning with the forecasted price decline and allowing for a reasonable profit margin. This strategy prioritizes risk management by minimizing potential losses while aiming to capitalize on the anticipated price movement. Given the price trends and forecast for Solana, a medium-term investment strategy appears to be the most suitable approach. The historical prices show a generally upward trend, but with recent consolidation around the $250 mark. The forecast suggests a continuation of this upward momentum, with prices potentially reaching $270 within the next few weeks. This indicates a bullish outlook in the medium term, making a long position advisable to capitalize on the potential for price appreciation. An ideal entry point for this strategy would be around $253, aligning with the current price and providing a good entry point before the predicted price increase. A stop loss should be set at $248, slightly below the recent consolidation level, to protect against any unexpected price reversals. The target price should be set at $268, aiming to capture a significant portion of the potential upside while allowing for some room for price fluctuations. This strategy balances risk and reward, aiming to capitalize on the bullish outlook for Solana in the medium term. Based on the provided Jupiter price information, a medium-term investment strategy appears most suitable. The historical price data reveals a volatile trend with both upward and downward movements. While the recent price has dipped, the forecast suggests a potential for growth in the coming weeks, reaching up to $0.984. The support price of $0.7961 offers a safety net, while the resistance price of $1.1448 indicates a potential ceiling for the short term. Therefore, a long position is recommended, aiming to capitalize on the forecast growth. An ideal entry price would be around 85 cents, a point slightly below the recent price and above the support level. A stop loss should be placed at $0.7961, the support price, to minimize potential losses. The target price could be set at $0.984, aligning with the highest forecast price, allowing for substantial profit potential within a medium-term timeframe. Given the price trends and forecast for render, a cautious investment strategy would focus on a short-term approach. The historical prices show a recent dip, with the current price hovering around the support level of $6.733. The forecast indicates a further decline in the coming week, suggesting potential for short-term profit. Therefore, a short position is advisable to capitalize on this anticipated decline. An entry price of $6.85, slightly above the current price, allows for a margin of safety. The stop loss should be set at $7.04, the highest recent price, to protect against unexpected upward movement. The target price should be set at $6.55, aligning with the forecasted low point, allowing you to take profits before the price potentially rebounds. This strategy aims to capitalize on the short-term bearish trend while managing risk effectively. Given the price trends and forecast for Solana name service, a cautious investment strategy would focus on a short-term approach to assess the market sentiment. The historical prices show a fluctuating trend with recent declines, while the forecast suggests further dips in the coming week. The support price at $0.2093 indicates a potential floor for the price, while the resistance at $0.2464 suggests an upper limit for the near term. Considering this, a short position seems more suitable to capitalize on the anticipated decline. An entry price of $0.215, slightly above the current price and close to the recent high, allows for a small margin of error. The stop loss should be set at $0.224 to limit potential losses if the price unexpectedly rebounds. The target price should be set at $0.209, slightly below the support price, allowing you to secure profits before the market potentially bounces back. This strategy focuses on a short-term perspective, aiming to capitalize on the predicted price dip and exit before the price potentially stabilizes or reverses its trend. Given the price trends and forecast for Doge-Coin, a medium-term investment strategy appears most suitable. The historical prices show a period of consolidation around 35 cents, with recent fluctuations. The forecast suggests a slight upward movement, hovering around $0.354 to $0.362. While the support price is at $0.35026, the resistance is at $0.39414, indicating potential for further growth. A long position would be advisable to capitalize on this potential. An ideal entry price would be around $0.352, slightly below the current price, allowing you to enter at a potentially discounted rate. The stop loss should be placed at $0.35026, the support price, to minimize risk. The target price could be set at $0.39414, the resistance level, aiming to capture the full potential upside. This strategy allows for a medium-term hold, potentially benefiting from the anticipated upward movement while managing risk through a well-defined stop loss. Based on the provided data for PEPE, a short-term bearish strategy appears most suitable. The 2-week price history shows a downward trend, and the forecast predicts further declines. The current price is hovering near the support price, suggesting a potential for further downward movement. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current market price, with a stop loss set slightly above the current price to limit potential losses. The target price should be set at a level below the support price, aiming to capitalize on the predicted decline. This strategy leverages the short-term bearish outlook and aims to profit from the potential price drop in PEPE. Given the current price trends and forecast for SHIB, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price close to the support level of $0.0000192. The forecast suggests SHIB could continue to decline towards $0.0000191, indicating a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. An aggressive short-term investment strategy could involve an entry price of $0.0000202, aligning with the current price. The stop loss should be set at $0.0000204 to protect against any unexpected price recovery. The target price should be set at $0.0000192, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support. Given the historical price data and the 1-week forecast for DOG-E, a bearish investment strategy appears to be the most suitable. The historical prices show a clear downward trend over the past 2 weeks, with the recent price hovering around $1.28. The forecast predicts a further decline in price, reaching as low as $1.1 over the next week. This downward trend, coupled with the forecast, suggests that the market sentiment for DOG-E is currently negative. Therefore, an investment strategy focusing on a short position in DOG-E is recommended. A suitable entry price would be $1.30, slightly above the current price, allowing for a small margin of safety. The stop loss should be set at $1.35 to limit potential losses if the price unexpectedly rises. The target price should be $1.15, aligning with the forecast and providing a reasonable profit potential. This strategy capitalizes on the anticipated price decline while managing risk through a well-defined stop loss. Given the provided price history and forecast for Doge-Coin, a cautious investment strategy focusing on the short term would be most suitable. The historical price data reveals a consistent downward trend, with the forecast predicting further declines. The support price at $0.00489 acts as a potential floor for the asset, while the resistance at $0.006215 suggests limited upside potential. Therefore, a short position on Doge-Coin is recommended to capitalize on the anticipated price decrease. An entry price of $0.00520 would allow for entry near the current price level, with a stop loss set at $0.00532 to minimize potential losses. The target price should be set at $0.00490, aiming to capture a portion of the projected decline while remaining mindful of the support level. This strategy prioritizes risk management and aims to profit from the prevailing bearish sentiment surrounding Doge-Coin in the short term. Based on the provided information for NEAR protocol, a short-term investment strategy appears to be the most suitable. The 2-week price change demonstrates a slight upward trend, but the 1-week forecast suggests a downward correction. The forecast predicts prices dropping from the current level to approximately $4.76. The support price at $4.754 provides a potential floor for the price decline. Therefore, an aggressive short-term strategy would involve entering a short position at the current market price, around $4.97. A stop-loss order should be placed at $5.08, slightly above the current price, to limit potential losses if the price unexpectedly moves upwards. The target price for this strategy would be $4.75, aiming to capture the potential price drop towards the support level. This approach capitalizes on the anticipated downward trend while managing risk through a well-defined stop-loss order. Given the price trends and forecast for Internet Computer, a cautious investment strategy would focus on a short-term approach to observe the price action. The historical prices show a slight downward trend over the past 2 weeks, with the current price hovering near the support level of $9.03. The forecast suggests further declines in the coming week, potentially reaching as low as $8.63. This indicates a bearish outlook in the short term. Considering the potential for a price drop, a short position would be advisable to capitalize on the anticipated decline. An entry price of $9.20 aligns with the current price and allows for a potential profit if the forecast holds true. A stop loss should be set at $9.40 to limit potential losses if the price unexpectedly rebounds. The target price could be set at $8.80, allowing you to take profits before the market reaches the predicted low. This strategy prioritizes risk management and capitalizes on the short-term bearish outlook for Internet Computer. Based on the provided injective price history and forecast, a cautious investment strategy leaning towards the short term would be advisable. The historical price data shows a period of consolidation with minor fluctuations, indicating indecision in the market. The forecast further suggests a downward trend in the coming week, which aligns with the recent price action. Therefore, a short position on injective is recommended. An entry price of $20.50 would allow for a potential profit if the forecast holds true. The stop loss should be set at $21.33, the resistance level, to limit potential losses if the price unexpectedly rises. The target price should be $19.62, the support level, aiming to capture a significant portion of the potential downside movement. This strategy allows for a measured approach to capitalize on the anticipated price decline while mitigating risk. Given the price trends and forecast for BTC, a short-term investment strategy focusing on a short position appears suitable. The 2-week price change demonstrates a downward trend, and the forecast predicts further declines, suggesting a bearish outlook in the short term. The historical prices show a consistent downward trajectory, with the current price hovering near the support level of $370.90. The resistance level of $417.80 is relatively far away, indicating a limited potential for upward movement in the near future. Therefore, an aggressive short-term investment strategy would involve entering a short position at the current market price, which is around $398. The stop loss should be placed at $409, slightly above the current price, to protect against any unexpected upward price movements. The target price could be set at $370, aligning with the support level and allowing for potential profit taking before the price potentially rebounds. This strategy aims to capitalize on the anticipated price decline in BTC over the short term. Given the price trends and forecast for THETA network, a cautious investment strategy would focus on a short-term approach. The historical prices show a recent downward trend, with the current price hovering near the support level of $1.97. The forecast suggests THETA network could continue to decline towards $1.93 in the coming week. This indicates a bearish outlook in the short term. Therefore, a short position is advisable to capitalize on the anticipated decline in prices. For an aggressive short-term investment strategy, an entry price of $2.04 would be ideal, aligning with the current price and allowing for a potential profit as the price falls towards the forecast. The stop loss should be set at $2.08 to protect against any unexpected price recovery. The target price should be set at $1.95, slightly above the forecasted lowest price, allowing you to take profits before the market hits major support at $1.97. Based on the provided price information for WorldCoin, a cautious investment strategy is recommended. The historical price data shows a recent decline, with the forecast indicating further price drops in the coming week. The current price is hovering near the support level of $1.90, suggesting that a further drop below this level could trigger a more significant decline. Therefore, a short position on WorldCoin appears to be a more suitable strategy at this time. An entry price of $2.08 could be considered, aligning with the current price and the forecasted downward trend. The stop loss should be set at $2.14 to limit potential losses if the price unexpectedly rises. The target price could be set at $1.90, aiming to capitalize on the anticipated price drop towards the support level. This strategy focuses on a short-term investment horizon, aiming to profit from the predicted price decline before the market potentially rebounds. Hooked Protocol's price history reveals a downward trend over the past 2 weeks, with the forecast projecting continued declines. The current price sits near the support level of $0.2803, indicating potential buying pressure. However, the resistance level at $0.3222 suggests an uphill battle for upward momentum. Considering these factors, a short-term bearish strategy appears more prudent. Therefore, I recommend taking a short position on Hooked Protocol. An entry price of $0.300 would allow you to capitalize on the potential decline towards the support level. A stop-loss order should be placed at $0.310 to limit potential losses in case the price unexpectedly rallies. The target price could be set at $0.270, aiming to profit from the anticipated downward movement. This strategy focuses on capitalizing on the short-term bearish momentum while managing risk through a well-defined stop-loss. Given the price trends and forecast for Artificial Superintelligence Alliance, a cautious investment strategy would focus on a short-term approach to manage risk. The historical prices show a downward trend over the past 2 weeks, with the forecast indicating further declines. The current price is near the support level of $1.188, suggesting a potential for further downside movement. The resistance level at $1.245 indicates a strong barrier to upward price action. In this scenario, a short position is advisable to capitalize on the anticipated decline in prices. An entry price of $1.22 would allow you to enter the trade near the current price level, while a stop loss at $1.25 would protect against any unexpected price rallies. The target price could be set at $1.18, slightly above the support level, allowing you to take profits before the market potentially hits major support. This strategy aims to capitalize on the short-term bearish outlook while minimizing potential losses. Given the price trends and forecast for Polkadot, a cautious investment strategy would focus on a medium-term approach. The historical prices show a slight downward trend in the recent 2 weeks, with the current price hovering near the support level of $6.30. The forecast suggests a further decline in the coming week, with prices potentially reaching around $6.09. However, the relatively stable support level and the possibility of a rebound in the medium term make a long position a viable option. An aggressive medium-term investment strategy could involve entering a long position at $6.31, the lowest price in the recent history. The stop loss would be set at $6.20, slightly below the support level, to minimize potential losses. The target price could be set at $6.68, the highest price in the recent history, aiming to capitalize on a potential rebound in the coming weeks. This strategy acknowledges the short-term bearish outlook but positions itself for potential long-term gains by buying at a discounted price and targeting a previous high. The provided historical price data for Filecoin reveals a fluctuating trend with both upward and downward movements. The forecast indicates a continued downward trajectory, suggesting a bearish outlook for the short term. Considering this, a short position on Filecoin appears to be the most suitable strategy. To implement this strategy, an entry price of $5.08 could be considered, aligning with the current price and the downward trend. A stop loss at $5.12 would provide a buffer against unexpected price surges. The target price could be set at $4.92, representing a conservative profit target based on the forecast. This strategy aims to capitalize on the anticipated decline in Filecoin's price within the short term, while the stop-loss mechanism helps mitigate potential risks. Based on the provided historical price data and the one-week forecast for Conflux, a cautious medium-term investment strategy appears most suitable. The historical prices demonstrate a fluctuating trend, with recent dips suggesting a potential consolidation period. The forecast indicates a slight upward movement, but the price remains relatively close to the support level. This suggests a potential for sideways movement or a gradual upward trend in the medium term. Therefore, a long position is recommended, aiming to capitalize on the potential for a gradual price increase. An entry price of $0.150, slightly above the current price and close to the support level, would provide a good entry point. The stop loss should be set at $0.1423, the identified support price, to limit potential losses. The target price could be set at $0.178, the recent high point, allowing for a moderate profit potential. This strategy balances risk and reward, taking advantage of the potential for a gradual price increase while protecting against significant downside movement. Ethereum name service shows a slightly fluctuating price trend over the past 2 weeks, hovering around the $33 price level. The forecast suggests this trend might continue, with prices staying relatively stable in the coming week. Considering the support price at $32.88 and the resistance price at $43.47, a medium-term investment strategy appears suitable. A long position is recommended, aiming to capitalize on potential upward movement towards the resistance level. The entry price should be set around $33, aligning with the current price and the forecast. A stop loss at $32.90, just below the support price, would protect against significant downside risk. The target price can be set at $35, allowing for a moderate profit if the price rises towards the upper end of the recent range. This strategy balances risk and potential reward, taking advantage of the current market conditions while allowing for potential price fluctuations within a defined range. Based on the provided information for Avalanche, the historical price data suggests a slight downward trend over the past 2 weeks. However, the forecast indicates a further decline in the coming week. This bearish outlook, coupled with the price currently being near the support level of $35.20, suggests a short-term investment strategy with a short position. An aggressive approach would involve entering a short position at the current market price, which is close to the forecast's lowest point. Setting the stop loss at $36, slightly above the current price, would protect against any unexpected price surges. The target price should be set at $34, aligning with the forecast's lowest prediction and allowing for potential profits before the price potentially bounces off the support level. This strategy capitalizes on the anticipated price decline while managing risk with a well-defined stop loss. D.O.G.E shows a recent price decline with a forecast suggesting a slight upward correction in the coming week. Although the price dipped below the support level of $0.04621, the forecast indicates potential for a rebound. Considering the short-term price movements and the forecast, a short-term long position seems suitable. An entry price of $0.0465 would allow you to buy near the current price and potential support level. The stop loss should be set at $0.0448, slightly below the recent low, to minimize potential losses. The target price could be set at $0.0496, aligning with the higher end of the forecast and offering a reasonable profit target. This strategy aims to capitalize on the predicted upward correction in D.O.G.E while managing risk through a well-defined stop loss. Based on the provided price information for PENDLE, a cautious investment strategy is recommended. The 2-week price change shows a volatile trend with both upward and downward movements. The forecast predicts a downward trajectory in the coming week, suggesting a potential bearish outlook. Considering the support price at $3.587 and the resistance price at $4.739, it appears that the price may consolidate around the support level in the short term. Therefore, a short-term investment strategy with a focus on the short side is advisable. An entry price around $3.70, slightly above the current price, allows for a small buffer while still capitalizing on the potential for a price decline. The stop loss should be set at $3.80 to limit potential losses if the price unexpectedly surges. The target price could be set at $3.40, aligning with the lower end of the forecast and offering a reasonable profit margin. This strategy aims to capitalize on the anticipated short-term price dip while managing risk effectively. Based on the provided The Sandbox price information, a cautious investment strategy with a medium-term perspective appears most suitable. While the 2-week price history demonstrates some volatility, the forecast suggests a slight downward trend over the next week. The current price is hovering near the support level, indicating potential for a temporary bounce. Therefore, a long position could be considered with a conservative approach. An entry price around $0.555 could be a good starting point, aiming to capitalize on a potential rebound towards the resistance level. The stop loss should be set at $0.549 to minimize potential losses if the price continues to decline. The target price could be set at 58 cents, aiming to profit from a moderate upward movement. This strategy balances risk and reward, allowing for potential gains while mitigating the impact of a potential price decline. Given the price trends and forecast for Decentraland, a cautious investment strategy would focus on a short-term approach. The historical prices show a fluctuating trend with a slight downward bias, and the forecast indicates further declines. While the current price is near the support level of $0.4692, the resistance is at $0.4976, suggesting limited upward momentum. In this scenario, a short position is advisable to capitalize on the potential for a price decrease. For an aggressive short-term investment strategy, an entry price of $0.481 would be ideal, aligning with the current price and the forecast. The stop loss should be set at $0.498 to protect against any unexpected price recovery. The target price should be set at 46 cents, slightly below the forecasted lowest price, allowing you to take profits before the market hits major support. Based on the provided ENG coin price history and forecast, a short-term bearish strategy appears to be the most suitable approach. The 2-week price change demonstrates a downward trend, and the forecast predicts further declines in the coming week. The price is currently hovering near the support level of $0.162, suggesting a potential for a further drop. Therefore, I recommend taking a short position on ENG coin. An aggressive entry price would be $0.173, aligning with the recent price action. The stop loss should be set at $0.169 to minimize potential losses if the price unexpectedly rebounds. The target price could be $0.158, reflecting the predicted price decline and allowing for a reasonable profit margin. This strategy capitalizes on the bearish sentiment and aims to profit from the anticipated price drop in the short term. Given the price trends and forecast for Uniswap, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend over the past 2 weeks, with the forecast indicating further declines. The forecast suggests Uniswap could drop from its current price to as low as $11, while the support price sits at $8.146 and resistance at $13.137. This indicates a bearish outlook in the short term, making a short position the most suitable strategy to capitalize on the anticipated decline in prices. For a cautious short-term investment strategy, an entry price of $12.50 would be ideal, slightly above the current price to allow for some price fluctuation before entering the trade. The stop loss should be set at $13 to protect against any unexpected price recovery. The target price should be set at $11, slightly below the forecasted lowest price, allowing you to take profits before the market hits major support at $8.146. This strategy aims to minimize risk while still capturing potential profits from the expected price decline. Based on the provided data for Chainlink, a short-term investment strategy appears most suitable. The recent price history shows a fluctuating trend, with the price hovering around $25. Despite this fluctuation, the forecast suggests a slight downward movement in the coming week. This downward trend, coupled with the current price being relatively close to the resistance level of $25.18, indicates a potential for profit through a short position. Therefore, an investment strategy focused on a short position in Chainlink for the short term is recommended. The entry price should be set at $25.15, aligning with the resistance level and allowing for a quick entry into the trade. The stop loss should be placed at $25.35, providing a buffer against any unexpected upward movement. The target price can be set at $24.50, capitalizing on the predicted downward trend while leaving room for potential price adjustments. Given the price trends and forecast for Aave, a medium-term investment strategy appears to be the most suitable approach. The historical prices show a generally upward trend, with recent fluctuations around the $330 to $340 range. While the forecast suggests a slight dip in the coming week, it also indicates a potential rebound towards the end of the period. This suggests a consolidation phase before a potential continuation of the upward trend. Therefore, a long position is recommended for Aave. An entry price of $330 would allow you to buy in at a relatively attractive level, considering the recent price action and the potential for a rebound. The stop loss should be set at $320 to protect against a more significant decline than anticipated. The target price could be set at $350, aiming to capitalize on the potential upward momentum and the resistance level around $352. This strategy balances risk and reward, allowing you to participate in the potential upside of Aave while mitigating the downside risk. Given the price trends and forecast for EOS, a medium-term investment strategy appears most suitable. The historical prices show a period of consolidation, with the recent price hovering around the support level of $0.7626. The forecast indicates a slight upward movement, suggesting a potential for price appreciation in the coming weeks. Therefore, an investment strategy focusing on a long position in EOS is recommended. A suitable entry price would be 79 cents, aligning with the current price and offering a margin of safety above the support level. The stop loss should be placed at 76 cents, safeguarding against any unexpected price drops. The target price could be set at 85 cents, allowing for potential profit taking as the price approaches the resistance level of $0.8494. This strategy capitalizes on the anticipated upward momentum while managing risk effectively. Based on the provided Tron price information, a short-term investment strategy appears most suitable. The historical price data demonstrates a general upward trend, with recent fluctuations around the 24 to 25 cents range. The forecast prices suggest continued upward movement, albeit with some minor fluctuations. Considering the current price close to the support level of $0.2209, there is potential for a short-term price increase towards the resistance level of $0.2542. Therefore, a long position is recommended for a short-term investment strategy. An ideal entry price would be around $0.240, allowing for a potential profit as the price moves towards the resistance level. A stop-loss order should be placed at $0.230 to limit potential losses in case the price unexpectedly drops. The target price should be set at $0.252, aiming to capture a significant portion of the potential upward movement before reaching the resistance level. This strategy capitalizes on the short-term bullish momentum indicated by the price history and forecast, while managing risk through a well-defined stop-loss order. Given the current price trends and forecast for Suncoin, a cautious investment strategy would focus on a short-term approach. The historical prices show a slight downward trend, with the current price hovering near the support level of $0.0213. The forecast suggests Suncoin might continue to decline, reaching as low as $0.0212. This indicates a potential for short-term profit by taking advantage of the downward momentum. Therefore, an investment strategy for Suncoin would involve a short position. An entry price of $0.0223, slightly above the current price, would allow for a buffer against immediate price fluctuations. The stop loss should be set at $0.0228 to protect against an unexpected price surge. The target price would be $0.0213, aligning with the support level and offering a reasonable profit margin. This strategy aims to capitalize on the short-term bearish outlook for Suncoin while managing risk through a well-defined stop loss.